Hey, it's Rob. Welcome to the Everyday Investor TV show. This show is designed to help us grow our money. You see, the challenge often is that we take our precious time, we go to work, and if we do go to work, we are blessed. We receive a paycheck in order to eat. Let me say that again. We take our time, we go to work, we make money so that we can provide for our family. But imagine a life where money could make you money. You could work a little less if you wanted to, and then you could spend that time with family, friends, engage in a purpose greater than yourself. Every single week, I have an expert guest teaching their vehicle of investment so that you could be nurtured, so that perhaps if you wanted to do the same thing, you could. We are so grateful for you to be able to watch the show. Don't go anywhere. We'll be right back. Coming up, we're talking to Darren Mitchell, and he's teaching us how we can make money investing in the infinite banking concept.
So where do we save our money before we deploy it to one of those things that the wealthy people do that we try to copy? And really, in our view, there's just no better place than a cash value life insurance product.
Did you know that if you're selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, zero commission. Head over to our website, everydayinvestor.com, and find out more.
Do you love private lending, but are starting to feel like the passive side of it isn't as passive as it once was? Is running for bank drafts, wires, and constantly picking new deals taking the passiveness out of your passive investment? The CapCap Mortgage Trust has a lending solution for you. In our fund model, we allow you to invest across a pool of diversified mortgages, generating stable returns in a set it and forget it model. If this is the type of solution you have been looking for your private lending, make sure to reach out to myself and the CapCap team so we can help you.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to the Everyday Investor. Super excited for my guest to have this guest on today. We're talking to my good friend, Darren Mitchell. Darren, I always say that God only made a few perfect heads. The rest he covered with hair. And I'm so excited that you've not only coming on to the show, but you've decided to kind of partner with the Everyday Investor brand. And I'm excited because of this concept that we're going to be talking about, the infinite banking concept, where people can make money, they can grow their money using the infinite banking concept. In fact, your company is called Control Your Money and Compound It. And no, it's very exciting. How did you get involved? You know, I know you're a big finance guy, very opinionated, don't like all the fluff, which I love, opinionated in a good way. How did you kind of get involved in, and then where did you land? How did you get here to the infinite banking concept?
Yeah, well, I was a traditional financial advisor, right? Like I did mutual funds, everything else. And really it was almost 15 years ago. It was 2008 September. I was on the trip of a lifetime. I sold it to my wife so I could go to this salmon fishing trip with a buddy of mine in Alaska. And there I am in Alaska salmon fishing, just beautiful glacier mountains, and the stock market started dropping 1,000 points an hour. So I'm taking his truck, driving to the top of the hill, holding the old BlackBerry, trying to get reception to call the office to go, how ugly's it been the last hour? And for me, that was just a wake-up call to, holy cow, I'm not in control of my money, and I'm not in control of my client's money. I need to do something different. And that's kind of where I went on this education crusade, where I spent 2 years traveling North America, learning from the wealthy, had some great mentors, studying what the wealthy people do. And that's really where this infinite banking concept really took hold, and the business and the real estate investing and all those passive income things that are perfectly situated with the infinite banking. So that's kind of how I got started in it. And now we work coast to coast in Canada with real estate investors, business owners, and individuals to help them implement the infinite banking concept in their lives.
Well, my plan is to have you on this show, 5, 6, 7 times, speaking directly to the viewers, to be able to teach this, because this is one of those things. I mean, I guess there's many, whether it's mutual funds and bonds and securities, and these things are all complicated, but they're not if somebody could help break them down in a very simple fashion. And I'm very excited for you to come on throughout the years to be able to break this down and to be able to teach it. So in a nutshell, I'm able to use my insurance policy, and I'm able to, my policy is growing, it's continually growing. I can take money from that and I can invest it in real estate. And I know I'm not doing justice in terms of all the bells and whistles in and around it. But before we even get to that, Darren, I was always taught, Rav, if you are striving to be successful financially, then why don't you just go ahead and get a 10-year term insurance policy, and I pay my $1,000 a year, and if something happens to me, my wife gets $1 million, and if something happens to her, I get $1 because I'm supposed to be able to do that. So I've done that 3 times now. So I'm 52 years old. What's that? I heard you say, Rav, you don't look like it. Thank you. So I'm 52. I think I had in my 30s, my 40s, and here. But you've taught me something different. So talk to me about the difference about this term policy, a 10-year term, and every 10 years the nurse comes over to make sure that I'm okay, and then the whole life, because all I knew back then was, oh, my monthly on the whole life is more expensive. This is cheaper. I'll go with the cheaper. That's the Indian in me, Darren. So help me out with that. Help the viewers out.
Yeah. So term insurance is a great product for pure death benefit, right? Death benefit to cover you for the next 10, 20 years. That's great. This doesn't replace term insurance, or at least not initially. This is a different concept in the sense that we're looking at where do we save our money, right? If we want to act like the wealthy and do the things the wealthy people do, we've got to be in control of our money. So where do we save our money before we deploy it to one of those things that the wealthy people do that we try to copy? And really, in our view, there's just no better place than a cash value life insurance product. But I want to step back here. There's over 10,000 different insurance products and life insurance products in Canada. Of those 10,000 plus, there's 4 specific products we use. So that every single insurance product other than those 4 doesn't fit for the infinite banking policy. So, when people say insurance is a horrible place to put your money, I pretty much agree, with the exception of those four plans if they're designed properly. Yeah, so we build up some cash value, and then you don't borrow your money. You actually borrow the insurance company's money. So that's the key. You're borrowing against your cash value. So if you've got $100,000 in there and you borrow $80,000 to go do a real estate deal, you still have $100,000 in your policy compounding completely tax-free.
That's a great point.
So just that easy, controlled access to your money at any point, no questions asked.
No, that's a great point. Thank you for clarifying. So I have a whole life insurance policy, cash policy, and it's growing, and it's not like when I borrow 80, 90%. How much can I borrow?
You can borrow 90% of your cash value, and that's contractual.
I can borrow 90%, and really you've taught me it's not like a typical bank where there's all sorts of conditions. There's no conditions. I can borrow it and then go, and you wouldn't want me to buy a nice car, but you would want me to invest it. So I could borrow it and I can invest it, but my policy, that $100,000 policy, it's still growing. It's still compounding.
Yeah, like we call it it's the only and asset you're ever going to have, right? Every other asset you have is an or asset, right? Do I do land development? Do I do private lending? Do I do an RSP, TFSA, or hire a coach? Well, this is an and asset. I'm going to put my money inside here and I'm going to compound it tax-free for the rest of my life. For the rest of my life, it's going to continue to compound. Okay. My money's in there and it's also providing a death benefit, not our initial focus, but it's there. And I'm going to leverage that money and do a real estate deal. And then I'm going to pay that loan back. And then I'm going to do another one. Like, I'll give you a land development example. So this couple of years ago, I had a client wanted to do $100,000 in a land development deal. I think you're familiar with the company.
Hold on one sec. Let me write it out for you. So he has $100,000.
Yeah.
In the policy.
So let's say, he had a cash value life insurance policy. It was like $110,000, $115,000, but yeah, in that ballpark.
Okay. And then what happened?
Okay. So he goes, well, great. I want to do this land development deal. And ballpark, it was put 100,000 in, and the goal was in 5 or 6 years, you get 200 and change back, right? That was the deal. But your money's, tied up for those period of time. Ended up working out great. But instead of using his own money, okay, because not being an or asset, do I do this or that? He did both. So his money was inside the insurance policy, compounding completely tax-free for the rest of his life and for a tax-free retirement. He borrowed $100,000. At the time, the interest rates on those loans were around 5 points. So 5%, so $5,000.
Okay, so he borrowed.
And that $5,000, because we're using it for an investment, that is completely tax deductible. So that 5% really cost him $5,000 less a 50% tax bracket. It cost him $2,500 a year. So for $2,500 for the next 5 years, 12.5,
yeah,
and he gets back 212,000.
Yeah, and this $100,000 policy kept growing.
Exactly. The $100,000 in there, and the cash value would have grown somewhere between 4 and 5% tax-free. So it was growing, and it was providing a death benefit, and it was doing the land development deal. We've multiplied money just like a bank. We're trying to act like a bank.
So this policy was growing on average, how much? What percent?
Yeah, so they start a little slow and then they come up. On average, long term, most of them are around 4 to 5% tax free, depending upon your age, your health, and all that stuff. But that's our target. And again, we're not shooting for the greatest rate of return. We're trying to build the base of your financial plan as a rock solid, bulletproof. I want to know that when the stock market crashes and real estate crashes, I still have access to my money and it didn't drop.
Okay, so I'm so grateful that you're with me for several months, and I'm a slow study. It takes me a bit here, and I've got $100,000 policy, life insurance policy, okay, cash policy. I want to borrow from the insurance company $100,000. I want to put it in real estate, and so in order to do that, I'm being charged, the investment fee would be, let's say, 2.5%.
No, so the loan rate was 5%. Now it's between 6 and 8.7, depending upon the company. Those rates have gone up along with.
No, but in this case, in this case,
yeah, in this case, it was 5% interest.
Yeah,
but that 5% was a tax deduction.
That's
so
right.
That $5,000 he paid in interest was a tax deduction.
That's right. So it's $2,500. That's why I just said 2.5%. Yeah. Okay?
Right.
But this policy is growing at 4 to 5%.
Yep.
So even just there, the policy is still growing. I'm taking this, I'm investing it, and then whatever I'm investing in, if you guys at home have been watching the show, we try to do if it's a land development deal, we're looking at 20% annualized returns. And so this is what we're teaching. Why use money out of my pocket? Why use money, that's under my mattress? Why use any of that? Why not borrow from the insurance company?
All right, so you can do both and
Yes.
provide a death benefit.
Yes.
So we can multiply money. Exactly.
Darren, I love your style. We're going to go to a break here. When we come back, we're learning the infinite banking concept. Don't go anywhere. The Everyday Investor continues in a moment.
Did you know that if you're selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, zero commission. Head over to our website, everydayinvestor.com, and find out more.
Hey, what's going on? This is Kyle here from Kyle Ford Mortgages. On today with my better half, Chelsea. We have a very exciting announcement. You've asked, we've delivered.
We have a really exciting event, so mark your calendars, June 9th to 12th. We have networking, mastermind, some awesome content. We have a pool party, a beach party, a black tie gala. We've got it all, and you can rent your very own cottage or have an awesome room at the Kiwi Motel.
If you're looking for all things real estate, whether it's short-term rentals, long-term rentals, private lending, creative financing, whatever it may be, not only great content, but great people, good times, you absolutely do not want to miss this. Make sure you check out the link.
Everyday Investor, First Access Condo is coming back to the hammer. That's right, we're coming back this week to Hamilton, Corktown by Slate Asset Management. 2 towers, 27 and 24 stories, 700 units, 225 John Street South in Corktown. And why is this so appealing? Well, the biggest problem about being a real landlord in this province is the landlord-tenant board. Now, what if I told you that the vast majority of foreign students like to pay their year up front? Doesn't sound great? Sounds amazing. And how do we get those? By a project being near a university. And what's the biggest university in Hamilton? McMaster. And how close is it to Corktown? A 5-minute walk. That's right, Corktown. 5 minutes from McMaster. First Access Condos. Don't be second.
Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to my good friend Darren. I'm so excited about this show because, at the age of 16, I was co-oping at a real estate brokerage. I'm 52 now, so whatever that is, 36 years. And about 10, 15 years ago, I was introduced to land development on a very large scale. About 4 or 5 years ago, I was introduced to stock options. But just in the last year or so, with the help of people like Darren, I've been introduced to the infinite banking concept. And it's just fascinating. Darren, thank you so much for being with us and teaching us and kind of committing to the next several months of teaching and even coming here to in studio to be able to teach direct to camera. I'm very excited about that. Me and you have had a few conversations. We're like-minded. When we say the word wealthy, we don't necessarily, the first thing we go to is not to money. As you and I both know, we want to be wealthy spiritually. We want to be wealthy relationally. We want to be wealthy mentally, physically, emotionally. But then comes in the money aspect. And so if we're just going to park on the money for a second, the finance component, what are you seeing? I mean, you've, as young as you look, you've been in the industry for quite a while. You've talked to lots of people. What are those that are financially well off? What are they doing? I mean, you touched on this, but kind of, give us the bigger picture.
Yeah, well, when I studied the wealthy and I went through this exercise, and I have everyone that works with us, I asked them the same question. It's like, think of every wealthy person you know, and think of how they became wealthy. And what I found is wealthy people do 3 things way better than the rest of us, okay? Wealthy people invest in themselves. Rav, you are the greatest investment ever. Whatever you can do to make Rav better, whatever to learn more about real estate, learn more about infinite banking, read books, take courses, get a coach, mentor, an investment in you, you're the golden goose. So if people ask me, where should I invest my money? Well, I think the first place is you make yourself better, right? Warren Buffett, at the last Berkshire Hathaway meeting, someone said, how do I invest in a recession? And he goes, same way you invest every other year. Number one place, invest in yourself. So I don't know if Warren read my book or maybe, that idea has been out there. But anyway, so which people invest in themselves? Second thing they do is they start.
Hold on one second. Hold on before you move on, because I know you won't do it. A very humble man. I want to do it. Talk about your books for a second. I see 2 behind you there. Talk a little bit about those books. I mean, they're bestsellers, but give people a little bit of information because that's a great way to invest in yourself.
Yeah, thank you. Yeah, and actually, so this is my the first book I wrote, Be the Bank, How the Wealthy Compound and Control Their Money, and you can too. And that's available on Amazon, all the different formats. And then that was a really big success. The way I actually wrote that book, okay, we're going to get to number 2 here in a sec, is I borrowed $50,000 from my insurance policy, okay? And I put that towards writing the book, the editor, the copy editor, the marketing, the whole deal. So paid it back in less than a year. That was about $2,500, and less tax deduction. So for $1,250, I was able to write this book, and it's been a huge success, and it's allowed me to grow my business. And then we found we were just we deal with a lot of our clients are real estate investors. Vast majority would be real estate investors because this concept works so well. So then I wrote a second book called Infinite Banking for Real Estate Investors. And that just gives some case studies and a little overview of the topic. But I'd suggest start with Be the Bank if you want to learn the concept is the first one. And then, yeah, we've got a podcast and a website and all that stuff as well.
So your information's there on the screen. The viewers, they can reach out, they can, email, they can watch your webinar. You're open for business to be able to help people, to help educate people on this concept.
Yeah, we call ourselves financial educators. So our goal is to educate you, and then if you like what you say, great, we can do business. If not, hope you learn something.
That's awesome. Okay, number 2.
Okay, second thing wealthy people do is they start businesses. And the third thing they do is they invest in real estate, right? Or some other hard asset, right? Whether it's private lending, gold, silver, land development, et cetera. But your business, real estate, that's where your wealthy people get wealthy. And again, think of all the wealthy people you know and say, did they do one of those things, 2 of those things, or maybe some people all 3 of those things? But really, I think that's step 2. That's where you invest your money. The infinite banking, we're going back to step 1, which is where do you save your money? Or where do you store the wealth you have now before you deploy it? And that really is where the infinite banking policies fit in perfectly because you're in total control. You're guaranteed your money can't drop. So when the stock market dropped in 2008 and the real estate market crashed, these whole life funds paid dividends around 7%. In 2022, when everything crashed, they paid dividends of 6% and change. So you're able to leverage even in a down market when nobody else can. So you're totally in control of your money, so you can redeploy it, your business, and real estate.
No, love it. Okay, so 1, invest in you. 2 again was?
Start a business.
Yeah, a business. Or?
3 was real estate.
3 was real estate, yeah. Okay, real estate or some sort of asset, and it's true.
Some sort of hard asset,
yeah,
as opposed to
gold,
a paper
silver.
asset, a hard asset.
Yes, probably not Bitcoin.
Now, I've got lots of clients that buy Bitcoin, but that's a little more volatile than the other things we deal with.
No, I'm having fun. I have dear friends that my son has a little bit, so on and so forth. But remember, the question was the wealthy, and today the wealthy, invest in themselves, a business, or a hard asset like real estate, something that is tangible. Now, one of the things that when we were talking, I said, so what I was taught was just have term, because the whole goal was that I'll have enough money later in life that I don't need to have a life insurance policy for my kids. But you shared something that was very interesting. It really was an awakening. Just share with the viewers what you shared with me.
Yeah, so when we do these policies, we're looking to take loans and pay them back, take loans and pay them back. But then in retirement, there's all kinds of ways we can spend this in retirement. My first book, Be the Bank, I talk about 5 different ways to spend it in retirement. But one is take tax-free loans against the policy in retirement. So you could, take $100,000 a year tax-free every year in retirement. That money doesn't show up in your tax returns, doesn't affect your old age security, government benefits. Boom, it's there. Or, one of the strategies a lot of people have is this does come with a death benefit. It's not our focus, but all of a sudden when you turn in 50s, 60s, and 70s, that death benefit that you weren't too concerned about, all of a sudden it's like, wait a minute, I got some properties I might like to leave my kids, and that's going to be a lot of tax. I've got a business or some other investments I'd like to leave my family, or I'd like to leave a legacy, or I'd like to help the kids and the grandkids. And it also gives you a permission slip. So, we have an expression here that if you have a lot of death benefit in retirement, you can spend like a drunken sailor. Now, what I mean by that is, let's say you have $1 million of assets in retirement. Well, what most people do is live off the interest because they're petrified to spend it. They die, their spouse or family is going to be left with nothing, right? So they don't spend it, they just live off the interest. But if you have $1 million of death benefit in that scenario, well, then you have that permission slip to say, you know what, I'll spend principal and interest. And if I die so I can spend 3 times as much when I'm living. And if I die and there's only 300 grand left, well, if there's $1.2 million or $1.3 million of death benefit, then that replenishes the assets for the family. And then again, there's multiple ways, but where we want to access it tax-free in retirement, we want to use it to spend our other assets more efficiently.
Yeah. No. I love that. I mean, I've had some friends that, you may be ill, you might get sick, you might get, and you want to try things. You want to try alternative medicine. You may want to travel to a different country, and, these are expenses, and, but you don't want to also have the guilt of, yeah, but am I taking away from my spouse or my kids or so on and so forth? What I hear you saying is, hey, we have the permission to do whatever we want with that money because we have the death benefit that will take care of it. And that's the difference between if I just had a term life insurance as opposed to the whole life, the cash policy.
And just to follow up on that, so picture you have a house worth a couple $1 million when you're 70 or 80. Well, I wouldn't dream of getting a mortgage on that or a line of credit at that age. But if I had a few $1 million of life insurance, all of a sudden, why wouldn't I access $50,000 a year against my house, die owing $500,000, death benefit looks after it? Or why wouldn't I refinance my income properties, refinance them, take that tax-free money, spend that in retirement? Oh, great, I'm leaving a big mortgage. Who cares if there's a death benefit that's going to pay off all those outstanding loans? So it really allows you to access different pots of money tax-free.
So let's say I borrowed $100,000 or whatever, $1 million from the policy. I'm investing it. The policy is still growing. I pay a little bit of interest on what I borrowed. And now all of a sudden something happens. The good Lord calls me. But I have this outstanding $1 million that's in an investment. How do we wrap all that up?
Great question. So the cash value, the death benefit's always going to be the highest number. The death benefit's going to be higher than the cash value. And the cash value is going to be higher than the loan because we can only borrow 90%. So when you die, let's say in that example, the death benefit was $2 million and you had borrowed $100,000 and you hit by a bus the next day. Well, the insurance company is going to say, here's $2 million tax-free to your family minus the $100,000 outstanding loan plus interest. So the loan gets paid off. Your family gets a check for $1.9 million. That's how it works.
I like your style. Darren, in 30 seconds, what have we talked about in the last 25 minutes? Give me 30 seconds.
Really what we want to do, we want to act like the wealthy. We want to invest in you, your business, and real estate, and we want to copy what banks do. What do banks do? They leverage money, they move money around, fund a cash value life insurance product that's stable, secure, leverage it multiple times so you have and assets, and then have a beautiful tax-free retirement.
Love it. And you help with dotting the I's and crossing the T's. It's not like I have to go here. Your outfit can walk me through everything, correct?
We coach you through every step of the phase, and we don't go away after the sale. We stay in service forever.
That's great. Darren, listen, thank you so much for being on the show, and can't wait till you come back. You'll be in studio teaching directly to the thousands of viewers that watch the show. Thank you so much for coming.
Thanks, Rav.
And thank you guys for watching the show. Without you, we would not have one. Make sure you go to everydayinvestor.com to be able to watch this show again. It's kind of like on demand. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.